This is one of the best trend following tools that you can use in 2024, and today I'm going to show you exactly what it is, how we can use this, and a strategy that you can implement right away. So sit back and let's get into the video. The RMI Trend Sniper is a powerful trend following tool designed to help traders identify potential buy and sell signals into the market by combining the elements of the commonly known RSI, Relative Strength Index, and the MFI, Money Flow Index, for a comprehensive view of the market's momentum and strength. So before we start, I'm using the price of NZD USD on the 15-minute time frame. So let's head on over to the Indicators tab, and we are going to search for the RMI Trend Sniper by TZAC88. Once loaded, let's head on over to the Indicators section. Now you can either double click on the RMI line or head on over to the top left hand corner and slide across to the gear, which will open up the settings. Then head on over to Inputs, and underneath RMI settings, you'll see a selection for RMI length, and it needs to be set at 21. Then head on over to Style and uncheck both plot candle and bar color. Okay, so before we start, we need to understand how this actually works. Okay, so the RMI Trend Sniper is made up of two components. The main component being is that we have a line that tracks price action and helps us identify bullish and bearish structural markets. Now it does this by changing color depending on the trends. Blue when looking for longs, and red when looking for sells. Now in addition to this, it also has labels that identify the trend change, and we can use these to identify buy and sell in opportunities. So as we can see on the screen now, we have a green label underneath price action, and the RMI Trend Sniper's line has changed from red to blue, signifying we're now in a bullish structural market. Now if we look over to the top left corner, we can see above price action a red label, signifying to us we've just changed from a bullish structural market to a sell structural market, which is also identified with the blue line changing to reds. Now, as we can see, it gives us a lot of good opportunities, but still gives us false signals. As we can see here, the overall structural market is bearish, and it's still telling us to buy on the short-term pullbacks. So we need a way to filter out all the noise. Now, how do we do that, you ask? We do this by adding in a higher time frame indicator and taking trades in line with the overall market structure, as this determines the trend direction. So for this scenario, I'm going to be using the market bias. So let's head on over to the Indicators tab and search Market Bias by Professor X. Now once loaded, let's make some adjustments in the settings, and I'm going to do this by double clicking on the market bias. Head on over to its inputs, and underneath HA Market Bias, we're going to change the time frame from chart to 1 hour to help us get a better understanding of the 1 hour direction, to help us filter out a lot of losses by determining the overall market direction. Then we're going to go down to period and change it from 100s to 200s. And we're going to leave the rest of the settings at defaults. So as we can see now, the market bias is colored in reds, and we've managed to filter out 1, 2, 3, 4, 5, 6 losses, and only traded in line with the overall trends. Now the market bias is used to determine the overall direction of a financial market by using smooth Heikin-Nashi candles, and we're going to be using this to help us identify the overall direction by analyzing the color of the market bias. When it's colored in green, we're only going to be looking for long continuation trades, and when it's colored in red, we're only going to be looking for sell continuation trades. Now we understand that we can drastically reduce the amount of losses taken. Let's understand the exact system of how we combine these both together. So for the first step, we're going to be identifying the overall trend direction, and we do this by analyzing the market bias's color. So when looking for longs, we need to make sure that the market bias is colored in green, showing us that the overall sentiment is bullish and we're only looking for long continuation trades. The next step is waiting for our entry signal, which is the RMI Trend Sniper giving us a green label underneath price action, as well as the RMI line changing from red to blue. And once these confirmations have been met, the next step is simply just to execute. And we do this by taking an instant execution on the same candle that the buy signal was printed. Now for our stop loss, there's going to be two stop loss variants that you can choose from. There's going to be an aggressive stop loss and a conservative. Now the conservative stop loss will be directly underneath the swing low, and the aggressive stop loss will be directly below the RMI trend sniper line. And for this scenario, I'm going to be using this directly below the RMI trend sniper. Now for our trade targets, we're going to be targeting a 1 to 5 risk to rewards, with our trade management making it risk-free once we are 50% up of the take profit. Okay, so we had to be extremely patient, but we finally hit a 1 to 5 risk to rewards, which means we are 5% up. Let's go and take a look at another example. First, we need to identify the overall direction, and we do this by analyzing the color of the market bias. And in this scenario, the market bias is colored red, which means we're only looking for bearish continuation trades. Now, the second step is to wait for our entry signal, which is the RMI trend sniper issuing a red label directly above price action, with the blue line changing to red. And once these confirmations have been met, we'll take the instant execution on the exact candle that the red label was printed, with our stop loss directly above the RMI trend line or above the swing high. But in this scenario, we're going to put it above the RMI line. And for our targets, we'll be at a 1 to 5 risk to rewards, with our trade management making it risk-free at 2.5%, or halfway of our position. And our final target has been hit for a 5% return when risking 1%. Now for advanced traders, you can wait for price to pull back to the market bias before giving you the signal that you desire for your trend direction. But do note, for this way of trading, it's going to increase your win rate but reduce the amount of volume that you take, which will also reduce the profit that you make. So now let's go ahead and look at the back testing result. Okay, so in 8 months, I took 50 trades, 18 won, and 5 broke even, with 27 losing, which means 54% of the trades lost when going for a 1 to 5 is perfect. Now the max drawdown is 6%, which means it's no problem with a funding account, long as you risk 1%. Now the max gain was 20%, which means we had a nearly 1 to 4 comparing to our max drawdown, which is huge. Now the net profit in 8 months was 63%. With a 100k funding, you've just made 63,000 in 8 months, which is a substantial amount of money to be made, and 63% in 8 months isn't even the full year. I hope you guys have enjoyed this video. Let me know if you're going to use the advanced or the beginner. I just used the beginner for the back testing, but let me know what you use down in the comment section below. And like always, thank you for watching.